Good morning, everyone. Welcome to Thursday's London session. I'm just doing a little scalp on crude oil because we are in a range. So I'm gonna go back to the analysis that we did yesterday. No, let me just take that off. Okay. All right, now I can talk. So we know that we are in arriving into a demand area, but for now there is literally no reaction. Like nothing is really happening. So we keep making a lower low. So that happened yesterday after the inventories. And today is sort of like a decision day. Are we going to bounce? Are we going to keep going deeper into the area? So with the lower low yesterday, for now, I'm not too hopeful that we are going to have a bounce. At the London Open, we have a pretty sizable gap down when I compare yesterday's London value to where the price is opening today. So that gap is actually over 1.5% down. If you follow me on Twitter, I did post something on Edgeful that is pretty interesting and does apply across the board, and that's if you look at some stats, you see that the normal size gap is about 0.4 up to about 1%, but the larger the gap gets, the less likely it becomes that the gap is going to fill. And actually, if we have a gap that's 1.5% or over, it's very unlikely. We have 91% that gap is not going to get filled. So obviously that's something to take into consideration. Now, one thing about this measure for now is that we only have the daily value area, so it takes 24 hours, but they are working on bringing us the session related things so that we can control how the sessions actually behave themselves. And then you're also going to have the same information by weekday. So that's really, really good stuff. I always like to base my decisions on some statistical information because it gives us confidence, right? If you know that you're looking at a very low probability event, you may want to sit that one out rather than keep wondering whether you should be in or not. Now, there is a chance that we bounce from the demand, right? So we had that release that said we have a minus 4 million draw. So it means that we have basically lack of supply, right? So there is space for crude oil to go up. Now, typically what tends to happen around the inventory releases is that it goes an unrelated way on Wednesdays, and then on Thursdays you get that real move. So we'll see whether that's going to come today. But yeah, in the meantime, given the small range this morning, I was just kind of getting ready for the stream, and I identified a neutral day type, so I kind of ran it both ways. Pretty small like scalps, I would say. They were both about sort of 20 to 28 ticks, so nothing massive, but because it's a small scalp on a very small amount of cash for the risk, since we could limit risk on both ends, I sized up a little bit. So that was something that I don't do that often, but this was pretty obvious. It was like an eyesore to me, so I just I had to take it. All right, so let's see what else we've got. If you're wondering why I'm not trading copper anymore, copper has fallen down in the London range, down to 87 ticks of average session range. To me, that's not quite enough to actually get a proper decent move without being super granular. And on most mornings, I don't really want to be granular. I want to have easier trades because it's the morning, it's still waking up. I'm not really a morning person that much, and I used to be a musician for 20 years and a real night owl, right? So I used to go to bed at like 3 a.m., 4 a.m. sometimes even 5, 6 a.m. So whilst I am functional in the morning, I do find myself making a lot of mistakes if something is not super obvious and I have to like think really hard to find like hypos, and the day is not opening with a particularly easy outlook. So that's why copper for now is going to stay on the back burner until we can climb up over about 120 ticks for the average session range for London. But crude oil is currently sitting at 130 for London, which is, pretty decent, as opposed to 162. But I've noticed a few days over the last couple of weeks, we did have ranges of over 200 ticks. Now, usually, historically, like as a mean average, crude oil should have about 220 to 250 ticks per session. Per its main session, per NYMEX. So that's slowly kind of creeping up there in the ADR. So we do have almost 200 ticks on ADR, but not 200 ticks on NYMEX on most days. So obviously you have outlier days where it just kicks off into a trend, and then you might get 180 to 200. But, that's still a little bit unusual. And because it is summertime, I'm very kind of on the fence of whether I should be trading for the last sort of week of August or not. Because like I said, usually that will be the time of the year when I would leave and actually not look at charts at all. But this year, we're having some pretty fun times in equities. Although the power hour has been muted, I've got to say that. So I've been finding myself in positions that don't really go anywhere, and then I close them out for a few ticks or like a break even, and it's just like, So that's probably the summer effect. There's still a lot of movement throughout the day, but then, they just basically go, the market participants, they just go home. And we also have those annoying sandwich algos that we've been seeing on ES, on the Dome, that just always seem to be flying around. How did Hogue put it? Like flies around your face, but they never land on you. That's a very apt description. So during active trading hours on ES, you typically have very visible, thicker area above and below the price. And it just keeps tracking the price. So that means they're hiding what they're trying to do. They're hiding liquidity. And to be honest, until that changes, tape reading on ES for me has been a bit of a challenge because of that. Because usually you have humans trading and you can see some very clear intentions, and with them kind of hiding liquidity, that becomes a little bit trickier. So yesterday was a neutral day on equities, and I did try to voice my opinion during fast markets, but they did a trade anyways because we need at least 2 or 3 check marks, and they were adamant they wanted to go long. I didn't like that sell-off that just viciously came in, because the sell-off of that sort is almost never the beginning of an uptrend. It's usually the beginning of a range-bound day. Why? Because we had the initial balance size doing X amount of ticks, and then that sell-off was not only the full size of the initial balance, but also went deep into it, right? Now, when you have such a huge whipsaw, that is a whipsaw, right? And that very, very rarely brings yet another trend day. So just purely from experience, I was like, yeah, this is looking like a range-bound day. And then I kept trying to, to say it's a range-bound day, but they were like, let's go long. So everyone was super excited to go long. But yeah, so it ended not well, obviously, yesterday. So maybe we should look to be maybe a bit mindful if we do have such large, because you know how Dolby says he has this rule about not doing a range-bound trade if he has a very long-wicked candle that sort of goes into the bottom of the entire range that he's looking at. So likewise, maybe we should not look to, because larger time frames will be behaving slightly differently. So when you have effectively almost a full average session range to get traversed in a very, very quick manner, on the 30-minute chart, that would mean that you need a whole bunch of power to keep pushing still in the same direction either way, whether, going long or going short, unless we have like some sort of an active release, like an FOMC rate decision or something. At least that's been my experience. So, hopefully we can maybe take something from that experience yesterday, and maybe set some rules that if we do have a whipsaw candle on a 30-minute chart quite clearly visible, perhaps we should just wait for a little while longer to get a little bit more information, because in my experience, 30 minutes of whipsaws usually means you have some sort of a barcoding potentially beginning. It's never the start of a really nice trending day. So, yeah. But it is what it is. That is trading. We have to make decisions in the heat of the moment, and sometimes we make great decisions, other times not so much, and we just have to take it on the chin and, move on, especially during the summer times when, we are prone to see more neutral day types at this time of the year. And I know we've been trending for the first part of August. June was pretty decent as well. And then we had a whole bunch of liquidity gaps in NQ and stuff. And to me, that was just like a little bit of an anomaly and an outlier. But now we are definitely in that, weird August period where neutral days will happen, but they will happen with like quite big ranges, and that makes limiting risk very difficult, but also running any sort of sensible positions without thinking them through, and maybe waiting until things settle down a little bit. That will make things very difficult for everyone, for every single trader out there. All right, so let's have a look at who's around. How long have I been trading? I've been trading for 16 years now. Yes, I do look younger than my age, quite a bit younger, especially with the lights that are quite forgiving. But yeah, I've been trading for 16 years. Out of that, I've been trading in prop firms for about 11 years. So I've been a crude oil trader and a gold trader for many, many years. Before then, I was a swing trader in euro dollar. So I come from Forex for the first 5 years of my career. And I was just an independent trader, trading my own cash. Started out in like 2K, and then in the space of less than 2 years, I managed to rack that up to, the pound and dollar conversion was different then. So just talking dollars, that was just under like $500,000. That was, but just pretty good going. So after I did that, I thought to myself, well, I'm pretty good at this. I really enjoy it. Maybe I should move away from music and just do this, because it became a little bit pointless for me to keep jumping around the world doing gigs when I was getting a little bit older. and effectively not really happy with the way the music industry was heading. So I thought to myself, I'm gonna make this into my career. And then I signed up for an apprenticeship, and I went into a firm where they taught me about profile. But before that, for about a year, I was trying to make intraday trading work, and it just wasn't clicking. I couldn't do it. So not on my own anyways. So I went to the hub of prop trading, which was Chicago, and I decided to do an apprenticeship. It wasn't cheap, but I think I came away with some really nice skills there, because I've never heard of profile before. I was like, what is this? Like, why did I hear about this before? And they only taught us like the basics of profile. They didn't go into, into as much depth as we normally do. What is going on with my screen? It is kind of dancing. Okay, that's fine. I'll deal with that later. I think something's pressing on something here. Weird. So that was the first time that I heard about profile, and they first put me on an equities desk, so they put me on ES, and I didn't like it because at the time, this was 2013, ES was moving like 12 to 16 ticks per day, so not great. And then they put me on crude oil. So it's like you could trade crude oil intraday. Oh my God. Like I was so green because I didn't come from any financial background or anything. I was just like a musician. I do have degrees, but they were all in music, right? And I did rock and pop, alto sax and electric guitar, since I was 14. And by the time that I was 33, 34, I decided to wind down the music part and become a trader full time. So I've kind of bounced around about 3 different prop firms. One of them was like a cross between an asset management and a prop firm. So I did have to do some exams, and I'm about to do Series 3, which is kind of an easier version of what I did. So it shouldn't be much of a problem because obviously we already know a lot of stuff. I just need to, the thing that really bothers me is like all the equations around the options that you have to do on the fly. So I'm kind of hoping that there's not going to be that much of that. But, whilst I'm kind of getting ready for that, that is literally the first thing that I want to kind of try and get down, out of the way. And then the rest of the questions are just like generalized questions about how clearinghouses work, how does the delivery work, and how the futures markets operate. And that's something that I've done already via the other RDR compliant regulations, so that's nothing new to me. Which is why, on the Series 3 questions, most of the time I can get it right. So, yeah, if you're wondering. Because I saw people in the chat sometimes wondering, are you like an economist in training or something? And I'm like, no, just a trader, mate. Christopher says, hi, Coach D. Do you consider levels in regular trading hours versus electronic trading hours? Yes. So I find that if you're looking for a particular setup, like a gap fill, for example, the one that I showed earlier, I would be looking for those to fully come true in the actual active trading hours. Now, whether you're trading London, Asia, or New York session, that will depend on the product that you're trading. Sometimes you can find out of hour setups, like, these scalps that I actually did pretty well today in crude oil. I didn't like the fact that I had to size up a bit because I find that sizing up in combines for me largely doesn't work. But if I'm only aiming for 18 to 28 ticks, then it's fine. And that's exactly what I did. So I kind of put it outside of my mind that I'm going to get some massive sort of 70, 80 tick move in crude oil. And I just went, you know what, let's just bounce this in this range, super tight range. But if I was doing, trading for the main session, I would probably look for larger reversal points. I don't necessarily like scalping during the active trading hours because for me, crude oil at the very least and gold have offered me very large moves, right? So why take 10 ticks out of it if I've empirically observed that same move, like let's say a failed auction, go for about 60, 70 ticks. So why would I take, just 10 ticks out of it? So that's something that I definitely consider type of a setup versus the stats that we have for that particular trading hours, time of day. And then I just try and express my position through that. Now, I'm going to be super straightforward with you guys. I have been struggling in my live account a lot this year, primarily because I think the market has not been that logical. And the ranges, I've been pretty vocal about the fact that crude oil's whole personality has changed, and by the time that, I'm expecting some of the setups that have worked for me a million times before, they just weren't coming. We were getting stuck in these ranges that were just like 30 ticks. So what's happened to me now, just purely talking friend to friend psychologically, now I'm really not happy doing momentum trades. In fact, I would say I'm scared to enter a momentum trade because of the previous 8 months that, the momentum trades just haven't been working. So, I go into a breakout from the initial balance and then it sort of goes 5 ticks, then comes back into the drawdown by 10 ticks and then just spends the next 2 hours there. So now I'm looking at the momentum breakout. Like yesterday, we had single prints that were created after the neutral day, but after the release. When you have a neutral day after the release, It sort of minimizes the neutral day, let's put it that way. And I was looking at it and going, this is a setup. I should be going short. This is a setup. But then in the back of my head, I was like, man, I got hit like so many times just not getting the momentum. So maybe I should just sit it out. And then for the rest of the day, I waited for a couple of reversals to happen into the euro close. They never came because we ended up kicking off a trend. And I only had like a limited sort of 15 tick reversals before it went down. And finally, I reached my personal data loss limit in the live, then decided to move to the combines, and then I got a rally of 60 ticks. So I did great in the combines yet again. So I really need to like see what is going on, and I know what's going on. I'm actually trying to minimize stop losses to minimize risk while still going into full lots. So totally transparent with you guys, I have been struggling, and I think it's because I'm trying to move away from what I know works, especially on moves like yesterday, which is like slightly wider stops, and then just waiting for the right time of day for those types of moves to happen. But no, what I was doing, I was trying to catch it on like 6 and 10 ticks, which, let's be honest, when something's moving 200 ticks per day, that's just asking for it. And naturally, in the combines, I have preset risk. I didn't mess around with the stop sizes. I just let it do whatever it was going to do. And then I ended up catching the move. So I need to stop doing that. This is the kind of analysis of my own sort of introspection that I do when I am in a drawdown and kind of doing stupid things that I know I shouldn't be doing. And this is the kind of thing that you will go through in your career. You know, markets change constantly. And sometimes they're not very conducive to what we were doing even 3 months ago or, you know, yesterday or last week. And that's something that I really need to pay attention to. So I have been journaling quite a lot, and I have been doing more combine trading. So I only really try to do like 1 day's worth of trading in my live. And I'm kind of working on ensuring that the stupid things that I've been doing do not translate into it. So, you know, as we get out of the summertime, things might get a little bit more normal. But I still want to see crude oil doing its regular 200 to 220. I mean, really, we've seen 300 ticks as an average session range for many years. So for them to be like locked up for many days, that's just very odd. And again, I will repeat this. I had another issue with that when Trump was elected. So election year was not good for me. And, you know, maybe that's something that happens during the election year. They don't move the, you know, they don't maybe move crude oil as much because everything's in like ever constant changing flux. So we'll see, you know, we'll see what happens. But, you know, I'm not in a rush. It's the main thing is to not lose the plot, right? So just don't overtrade. Limit the day. Somebody yesterday, and I know him because he was on my streams as well. I think it was AJ. He's in a drawdown this year, and he's like, oh, you know, I keep doing silly things. And, you know, he even reached out to Hogue to ask him what to do. But, you know, he was like, well, I'm already trading like once a day. How much less can I trade? Well, you don't have to trade every day, you know. Like, why do we think that we need to trade every day? You can observe the market, but to be honest, sometimes it's actually very beneficial to just move away completely from the charts, go into the woods or something, and just do a full reset, and then maybe wait to see what the next month brings. You know, so there are ways around it, and we really don't need to trade every day. Just because we're internet traders, that doesn't mean that we have to click buttons every day. And is there a way to add initial balance to Topstep? Not yet, but it is in review because we've had 133 upvoters on that. So they're working generally on the TPR profile, which probably will have a component of it as the initial balance. But for now, you know, obviously I have my own indicators and charting platform with my Blatek stuff, which is my company. And I do have it over there. But I mean, just, you can always just look at the time of day when this opens. So let's say we're in London now, 8 o'clock, 30-minute candles, right? So 8 o'clock to 8:30, and then you can just plop in a couple of lines. This is what I used to do when I didn't have Blatic and when I didn't have all my fancy indicators. So here we go. This is the initial balance high. This is the initial balance low. So if I want to, I like to do it as a little rectangle thing, just to delineate what was going on. There we go. So that's your initial balance, and you can see we went below it. That was my first scalp, and we went above it. That was my second scalp. So that was pretty easy. Yeah. So they are working on it. Bear in mind, this is a new platform, right? Topstep is a new platform. Typically, it takes many years to even get the platform to this stage. So just by the fact that they've managed to do it in such a short space of time, there's less than a year, it's absolutely mind-boggling and just a testament to how innovative Topstep really is, right? So it's amazing that we have all of these new features that we can request and be involved in the development of the actual platform itself. John says, have you ever blown up an account? Yes. So 9 months into my trading, I blew up 70K. So that was not a pleasant experience, but it also kicked me off on a road to learn about fight or flight response and psychology and myself at the end of the day. I used to be very explosive when I was, in my 20s and 30s even. But, as I got into my 40s, I sort of, I don't know, it takes a lot to get me to explode. And with the account of 70K that I lost, I was like, this can never happen again, right? Why did it happen? Whatever. And it was an overconfidence thing for me. So I was doing super well. I was a swing trader. I had 73% accuracy, and my risk reward, my average risk reward was 3.3. 3.3. That's a crazy amount of profitability. So naturally, young Dee starts thinking, I'm the wizard. I can do no wrong here. So I got biased on one position, and it just kept going against me. And I kept widening the stop until I removed the stop altogether. And then I lost the entire account. So I was like, that was very stupid. Why did that happen? And then for 3 months after that, I was shaking, right? I was completely shaking. So then after that, I started doing exercise, started going to the gym before every night and so before every day that I would trade. So before I would get to my desk, I would go and do 90 minutes of bodybuilding. I'm talking really heavy weights, just to get all of that adrenaline out of you, all of the glycogen reserves out of you, which are actually the fuel for the fight response. So when you drain all of the glycogen reserves, you have a much higher chance of keeping your rational brain intact and in control. So emotions and any sort of irrational thinking always come from the primitive side of our brains. So this is, I'm not a psychologist or a psychiatrist, but I read about it a lot and I know what worked for me. So again, I'm sharing my experience of what worked for me to get rid of stupid decisions and to not be that bothered by any losses or drawdowns, and to completely detach my self-worth from anything happening on the monetary side. And it took a long time. It took a really long time. But it's at the end of the day, it's just money, right? It is what it is, and we can't get too bogged down over what is happening in the markets, especially when you don't have much control over it. The only thing you can control is how much you're trading, what size you're putting on, where's your stop loss. That's the only thing that you can control in the markets, right? The rest of it is up to just the market participants and probabilities at the end of the day. But yeah, so I would say that well, actually, the question before that ties really well into this. Do you consider after 16 years of trading you got the discipline, patience, and consistency, and do you consider yourself profitable? Well, yeah, I mean, I've got a personal account. That is a huge chunk of my income. And I'll be honest, I haven't been trading crude oil or anything else on it. I've been trading DAX on it. So, that's been my bread and butter for the last 12 months. And without that, I would probably be in a drawdown over there as well. So it's, it's one of those things. The reason why I have like several instruments is because when I start to underperform on one of them, I will exclude it and I will focus on the ones that are performing well. And that's how I've been able to kind of keep consistency. But obviously, that's my personal account. I can choose whatever products I want to have on it. So I typically bounce between DAX, crude oil, gold, and ES for the end of the day. If I start to underperform for any one of those, they are immediately put on the back burner and I focus all of my attention to another session and the product that is showing me good results, right? But obviously on prop accounts, you only have what the prop firm has, which is why, we want to get Eurex here so that people can maybe implement something like that. If you're underperforming, let's say on NQ, you can then look at the entirely different market, which is still an equity index, but it's slower. It's much less whippy, or it's not whippy at all. And it's very smooth. It just moves. Maybe take a look at Nikkei. If you can trade overnight, Nikkei moves very smoothly. Like whenever I look at its chart, like I haven't really traded it much at all. I think I maybe did one Nikkei trade in my life. But whenever I look at the chart and how it moves, I'm always thinking that kind of looks like DAX to me. It's super smooth, very predictable. And when it goes, it just goes. And DAX is very similar to that. So, we will have a huge array of products on Topstep as well. But yeah, so for me, I've been staying away from certain products that have not proven to me that they have consistency. I bounce between platinum, copper. I looked at silver, but, I don't know. I'm just, every time I look at those, I'm thinking, well, gold actually moves better than that. So I always go back to gold for some reason. So yeah, I'm kind of keeping gold as an option. But for now, we do what we can, right? So I noticed this morning that crude oil was in a range. Now we're breaking out of that range. So we could have a reversal. But having said that, like I said, when I look at the very large gap that we have at the open, I don't think we're going to be moving too far. And if anything, I would be expecting us to try to move a little bit higher, but then to ultimately fail the move. If we get a full crazy move back up to the London value low, that's going to signal a reversal to me. That means that we have a bounce, like proper bounce, back to the value area from the weekly and daily demands, and we have back to value low, which is currently 100 points away. I mean, that's a long way to traverse during London. But let's see what New York brings, right? Because I'm never that happy with large gap fills because they never really go all the way. We'll see. So I'm just going to have a look at what the 4-hour chart looks like, because 4 hours can give you a nice clue. Okay, so 4-hour chart, like we have a base, but we do have this obvious top at 72.22, which in my opinion, if we want to do a proper trend turn and a trend reversal, we need to go above it and sustain above it. And then ideally create some sort of a new demand area around here. And then we might have something. So this is like looking like it's accumulating a little bit. So we'll see. We'll see. There is a chance that finally we have a bit of a breather. But yesterday was a pretty big move. So another big move down, probably not statistically very probable. Because simply on crude oil, when you have such large moves, the next day you have at least a partial pullback. And sometimes a full pullback. But this is a little bit too big. So we'll see. So do I think after 16 years of trading that I've got the discipline, patience, and consistency? Yes. I mean, I definitely have the discipline and patience side. Consistency, again, depends on what I'm trading, obviously, how the markets are behaving. But yeah, I do have consistency. I always aim for same types of levels and same types of setups at the same time of the day, right? So I don't really step outside of that framework, whatever is going on with my performance. I will always aim for similar setups at similar time of day from similar levels, right? That is where consistency lies, repeatable patterns. So this is the reason why I can tell when it's an anomaly whenever we start trading outside of that consistency rule effectively, because that's what I've observed for 11 years, right? In any market conditions. So to watch this stuff day after day, you do start to notice that whilst you might have, some days and weeks and even a few months out of that sample size, out of that behavior type and times of day, eventually crude oil in particular always falls back into the same patterns. So for me to start changing things just because, we didn't have movement, that's not on the cards, right? So I've still got levels that are based on statistical probabilities and actual market generated information. When you take something like ATR, ADR, or my ASR, it's all based on volatility of the product that you have at the time over the last 10 to 14 days. That doesn't change, it doesn't change the metrics, but it will scale according to whatever we have going on. Now, the problem with crude oil when it locks down is that it still does the same very big size 30-minute candles. So if you're using, let's say, a 15-minute chart to look for a failed auction, and then you get the failed auction that goes for the full initial balance, you really need to front run those trades, and therein lies the problem, right? So you have to start staring at very small time frames to get a better entry in order to limit risk. But if we have normal movement, normal momentum, you don't have to do that. You can just look at the 15 and 30-minute charts and position yourself based on that, never having a look at the 1, 2, or even a 5-minute chart for that matter, right? But yeah, when things start getting locked up, it more than anything, it just drains mental capital because suddenly you have to be so much more locked into it. But yeah, consistency, discipline, I do patience. I have endless patience. I am probably one of the most patient people that you will ever meet. I came from swing trading. So waiting for a couple of days or even a week for good market conditions to come in, it's really not a problem for me. And I would urge you to also look at the bigger time frames, because then many of you are glued into the day-to-day stuff. It's like, oh, I need to make money today. Oh, I need to pass a combine in 2 days. You don't. Or you want to pass a combine, or you're sick of doing combines, or whatever. I've had people that they come to me and they're like, oh, I just want to pass a combine. So now what? You're chasing not the process, so now you're just chasing combines and passing those, right? Why? It's all process. If you can't keep a combine going for 7 days, 10 days, a month, how do you think you're going to keep a funded account going for any length of time? Because the longer you spend in a combine, it builds valuable skills. So I wouldn't be trading, combines one way, and then suddenly, you trade your express funded accounts in a completely different way. I do size down, but the levels, expectations, and stop sizes, they remain the same. So the only thing that's different there is, there's no resets at that point. So you just have to grapple with whatever the market whatever the market gives you, and that means you can't size up immediately. So in those first few days, it's very important to have that discipline, self-control, and to start small, to give yourself a fighting chance to actually even get to a buffer in a funded account. But no, what we see people do, they pass in 2 days, complain about the consistency rule. Oh, we won't pass in 1 day. Why? So you can blow an XFA and then the next day, the very next day? It makes no sense. So, many people are moaning about the fact that we're going to remove the daily loss limit, but we're going to keep the consistency rule. They're like, well, that's not what we want. We want both removed, ideally, but they also want to have the ability to pass in 1 day. It's like, I mean, it would be great for the company, right? Because we're going to have more people failing challenges, but it's just not very good practice. That's not what we are about. Yes, we're prop firm, but we're not trying to get you to get there super fast. We're trying to set you up with all of this free educational content here, so to give you a fighting chance, to show you that, don't dig a massive hole in the first day of XFA. Just don't do it. You can dig holes all you want in combines because there's always a reset, right? That's great. But it's not the best practice maybe. However, it's down to you. You can do whatever you want. But once you get to the funded level, that's where maybe just a tweak on size. Don't change anything else. Just size down, right? Don't change anything else. Everything else, levels stay the same. Number of trades can stay the same. Everything stays the same apart from size and stopping at some sensible daily loss limit, right? Antonella says, Dee, how does crude oil move during the London session? Not well. You can see it. You can see it here. So let's go down to the 30 minutes. So this is a very tight range. So it's 71.60 up to 72.40. This is barely like a 40 tick range. So I don't like trading crude oil much during London. But like I said, recently I've noticed a few opportunities during London. So I did do a couple of little scalps. Won't be doing this every day. Obviously, this is post inventories and we didn't really do much. So I'm like, okay, let's grab a few ticks there. NL says, Dee, how do you calculate initial balance during London? What time do you start with? Well, if you're in my part of the world, I start at 8 o'clock. That is when London session starts. And I cut it off at 9. So that is your initial balance for London. Slip Kid. Good to see you, man. What's up, Dee? Woke up for a nature break. Thought I'd drop in and give a like before I go back to bed. They're very nice. Thank you for that. Oh yeah, so let's do some audience interaction, which I'm terribly neglected of. So let's do a like if you like what I'm talking about here. I know that I'm talking about some psychology stuff, but I think it's very important to try and understand, how your primal mind works and how your prefrontal cortex works. We want to have our prefrontal cortex engaged at all times. So if you like what you see here, if you like what I'm talking about, and if you've ever found value from my London sessions, please click a like, and it helps the segment a lot. YouTube algos are all about audience interaction. So I know you guys are asking questions and chatting, but those likes are very, very important. So whenever you're looking to support this channel for free, we give you so much free content and education. The least you can do is just click that like button, right? Andy Chan says, do you use visible volume profile? I prefer TPO profile, but I will look at large volume profiles. Like, for example, if I go up to the weekly chart, I like to see what sort of volumes and high and low volume nodes we have on that big profile. So you can see that here in the middle, we've actually built a lot of volume. So this, you could say that once we get into this area, it's very likely that we may establish a range from 82, roughly, between 82 and 75. So that's a very, very massive sort of weekly range. But at the same time, we have some supplies at 82. And it would be a very logical place for a reversal. So to me, this matches what I'm seeing on the supply and demand zones. And then we have thinner areas of volume around sort of 71 all the way down to 70. Those could be good reversal areas. That's where we're at now, which is why I'm looking at potential reversals. Is there a chance that it just keeps going? Of course, there's always a chance, all right? Like Hogue likes to say, ACH, anything can happen. And truly anything can happen. But at the same time, when you have those thinner volume areas, there's a chance that the price reverses from them pretty quickly, given the time frame, and then to go into a nice correction, right? So we'll see. Definitely an interesting area to follow. Next question. Dee, what do you think is a good buffer in an XFA? That will depend on your trading style, the size of the combine as well. So if you're trading 50K, I would say that by the time you already get past that drawdown, trading drawdown, that's already a good buffer, right? 2K on a 50K account, it's a pretty good starting point. As long as you don't start sizing up like a lunatic immediately after you reach 2K, you should be, you should make that last for quite a while. But to be safer, I would say before you start pulling any money out of it, I never really want to take any money out unless I have like at the very least 5K in there. And even then, I will only maybe take out $1,000. I operate on taking out between 20 and 30% of profits out of any prop accounts that I've ever had. And the reason why I do that is because I used to work for a company where your sort of salary sort of thing would be 20% of profits. It wasn't a salary because it, you still, it was still like eat what you kill kind of thing. But they operated on this way of doing 20% from any monthly profits. And then every year they would pay out sort of extra 30% for whatever the rest was there. So it was like an overall 50% profit split. But they had this like salary thing to keep people going. So every time you had a profitable month, they would pay you out 20%. And I quite liked that because it allowed me to build a really good buffer very quickly, whilst also looking kind of forward to the bonus at the end of the year. So it was a very nicely kind of structured thing. Now, some people would argue that if you have a big windfall, that you should take out, at least 50% of that. If it's a really big windfall, I would agree. But if it's just sort of like your regular profits and stuff, I found that 20 to 30% of getting money out is actually a pretty good balance between leaving enough money for maintenance whilst you're still building that account and still taking some money out. So, try and see if you like it. And but good buffers, like I said, will depend on the size of the account. If you're in a larger account size, if you're in like a 150K, I would say, again, before that drawdown is out of the way, I wouldn't be taking money out. So I would say 10K on 150K would be a decent buffer. And then maybe taking out like 2 to 3K every time you have a pretty good day, and so on and so forth. I don't like sizing up to 2 lots until there's about 30K in the buffer. Primarily because if you go into a drawdown period, it comes very quickly, especially if you like the 3K daily loss limit. You're not going to live like 10 days. So again, be sensible. Just be sensible. Don't size up when there's not a lot of buffer in the account, and don't take all of the money out so that you don't have anything left to play with. It's a fine balance for sure. It's a fine balance. But yeah, 20 to 30% in those beginning days when there's not that much buffer is something that worked for me well. Dee, do you think it's possible to have a full-time job and trade at the same time and be successful? Yes. So I would actually argue that's a better way to do things. I've had a few people over the years who came to me for coaching, and they gave up their job and they were like, now I'm going to be a full-time trader. Of course, they lost a bunch of their savings. That certainly didn't work. Very, very few people make that work. So, you have to have a very particular mindset in order to not have a job. But at the same time, if you have a lot of savings and stuff and if you're good with money, it doesn't have to be a problem if you have like 2 to 3 years of buffer and you're already pretty decent as a trader. I wouldn't say if you're not consistent at all, you've never gotten funded, quitting your job, flipping off your boss and deciding to go full-time, probably not the best choice. But if you're looking to, just transition into a more full-time thing, then having that buffer is definitely pivotal for your mental well-being. Again, we go back to psychology, right? So if you have 2-3 years worth of savings that cover all of your bills very comfortably, I would say, yeah, that's fine. But if you have a full-time job and you only have a limited amount of time to trade, I would say that's actually something that's going to keep you away from sitting there and clicking buttons. So if you know that you only have like an hour a day to do your trading, that's the time to trade, right? You're not going to be sitting there looking for subpar setups. And at that point, it becomes even more consistent to find levels that happen during that time and the setups that happen during that time. If I only had an hour in the morning before I had to go do another job, so if I had from 8 to 9, I would be doing and by the way, I did do that for like a year. I went to work in an IT recruitment agency because I wanted to learn how to recruit better for myself. And I wanted to move away from the markets. It was a bit of a tough time. I spoke about this before. I lost a very, very close friend to cancer. She was only 29. It was like really traumatic. And then I just needed to move away because every time I was sat down at the charts, I would just start crying. So I'm like, well, that's not good. So I went and worked for, I think it was probably even longer than a year, but I started back into trading probably about 6 to 7 months into it. And yeah, I was doing my analysis in the morning. So I would wake up at 5:30 a.m. I would do about an hour of cardio. Then I would look at the charts and I would do my analysis. I would mark up all of the levels of interest that I would have. And then I would set alerts. So as I would be on the way to work, sometimes the alerts would pop up. And I would look at my phone with a remote desktop and I would wait for a signal for the price to give me whatever. I would enter a trade with a stop loss, with an intended target and let it go. Whatever happened with that trade happened. So it wouldn't matter. So I would usually do that from a 30-minute chart because I didn't have time to stare at very low time frames. So I would wait until I would have a signal of reversal, let's say from... let's say I'm looking for failed auction. So I would set the alert at a level where the auction is failing because typically I want to have another level of confluence there. And then I would see the reversal, 30-minute chart, enter a trade, done, right? And I wouldn't look at it. I would just go and do something else. And that worked really well for me. I would typically do still 2 to 3 trades per day, but alerts were very important for me. They were very important. So in a way, I was still kind of trading during the same times of day. I would just not look at the chart actively until such time that the levels would come in. So yeah. Alexander says, I keep getting chopped up in London, changing my bias every time. I feel like New York is better, but the odd days London gives nice moves. What should I do? Don't trade London. Don't trade London. If you're getting chopped up during London, that's not unusual. I will say that because London is an out-of-hours session for most things, right? So, Alexander, I see you trade M&Q. Yeah, that's an out-of-hours session. So the only thing that I would maybe look at, so let's have a look at M&Q. The only thing I would say there is that maybe, just maybe, you might look at a range-bound strategy. So to fade the moves rather than to keep going. I'm guessing you're a momentum trader, right? And anytime somebody says to me, "Oh, I keep flipping my bias back and forth, back and forth," well, if I look at the London session, we already have a failed auction and a neutral day, and now we have this top from Asia. So I would say just fade that. At the same time, though, this is a very tight range, especially for NQ. But one way that you can do out of our session is to not chase momentum. So if you're chasing breakouts, that's not going to work in London for MNQ or NQ for that matter, or ES for most days. Like trends in London are something that happens even rarer than trends in New York, right? On those kind of equities. It's an out of hour session, and so for something to trend, you need a catalyst. That catalyst is usually via the news. Something happens overnight, some war thing, something kicks off, and then they go into a trend. It's the only way that we've seen trends happen during London on those particular instruments. So take that as sort of an idea of how you might be able to modify your approach. So rather than looking for breakouts and momentums, think of it the other way. Find a ceiling or a floor and then go, well, I need to look at this high and this low. That's the Asia low, Asia high. And then look at the top quartiles of those areas. Sometimes they even like to run stops through those areas during London. Just bear in mind that during the overlap, we have the increase in volume and we get the ranges back. So that's not coming in another 90 minutes. But once the overlap kicks in, it's like a whole different ball game. But during London, that's what you're working with. You're working with Asia high at 944.5. So by looking at that as a supply zone, as a sell zone where the sellers were previously there and not looking to break out of anything, just go, okay, maybe that's a sell. And then you have a low, Asia low, that was created at 4 a.m. my time at 866. So that's your reference low. But at the same time, don't go chasing all the way from the supply all the way down to there, because it's very likely that you might get stuck in just around the initial balance low. So, be sensible with your targets. I actually like to use VWAP as targets for those sort of kind of bouncy trades, ping pong trades as I like to call them. So when you have, let's say we get a sell from here, well, your profit will be at VWAP overnight. VWAP, which is 909.5 at the moment. So that's the kind of strategy. So ping from the top down to the middle, take profit, wait. If it falls all the way down, look at whether there's a reversal there. If it's not the overlap, again, time of day, very important in the way I trade. Try doing a reversal trade again, back to wherever VWAP will be located at that point. So middle of the range becomes your profit. If it starts to mess around the initial balance low, that would be a bad trade location, because look at the Asia high, Asia low. It's like middle of the range. Yeah, it might work sometimes, but I would probably look at middle of Asia as a bounce point potentially during New York, when you can get that momentum trade. Don't enter momentum trades in the middle of the ranges. We can enter them on a break of the range, but middle of the range is like 50-50 chance we have no edge and you have no way to limit risk. So very, very bad idea. Stay away from middle of the ranges at all times, I would say. My decision points will always be at the edges of the ranges, right? Whether that's a reversal or a breakout, that's a whole different contextual thing. But generally, it is not a good idea to look for middles of ranges for any sort of setups, okay? If you're looking for momentums, look at them at the breaks of obvious highs and lows. If you look for range-bound trades, look at reversals at obvious highs and lows. Very simple, right? You can put that on that mind map that I was teaching you about yesterday. You can put it as a motto: stay away from the middle. Ahmad says, how much would you risk per trade on a 50K combine? Not more than $125. That's like maximum risk per trade. Maybe even less than that. Why? Because it gives you about a couple of tries before you're at $250 loss, which would be my personal daily loss limit on a 50K combine, especially in the first few days. So I wouldn't be doing, 300 per trade, full contracts. 50Ks is micros, unless you can really limit risk on some trades, or if you're somebody who doesn't trade a lot and you can control yourself to only do 1 to 3 trades per day. Maybe then you can look at, one trade at $170 on CL and then walk away. I can't quite do that. I like to trade between 3 and 9 trades per day on various instruments. So what I usually do when I'm in the beginning stages is to use one lot and to limit myself to using one lot before there's some kind of a buffer in there. And then if it doesn't go well, I will probably reset, just not to spend too much time in combines. But yeah, they're a great way to test new things. However, be sensible about the size. Sizing is so important. What is my risk reward? Well, my risk reward on average floats around, depends on the performance, but it floats between about 1.7 R and then all the way down to 1.3 R, but also at times when I'm really performing well, all the way up to 2.3 R. We're talking averages of very long sample sizes, and my accuracy floats usually around 53%. If we're going to be like super realistic and stuff, 53% would be when I'm doing really well. 70% I've had that as well, but that is during times of extraordinary performance. That is not the norm for me because I go for a larger risk reward. That always comes with slightly lower accuracy. When I'm underperforming, that is 43% for me. So when I'm down to 43, 42%, it means that I'm not doing well. But again, usually because of the reasonably higher risk reward or medium risk reward, once I turn things around, it turns around very quickly for me because I never go down to negative risk reward or 1-to-1. I hate doing 1-to-1s on most days. So even on the little scalps that I did on CL, I still had a 1.2 to 1.3 R risk reward. Tayo says, Dee, any advice after you pass the combine? Please take it slow. If this is your first time passing the combine, or if you've blown accounts before, you need to size down until your dopamine levels come back to the norm. So what happens to us, I actually talk about this in the Funded Trader Blueprint course that I have on my website. Your dopamine levels go out of whack because you achieve a goal. And you get very excited about it. You're like, oh my God, I passed the combine. I've got an XFA. I'm a funded trader. And then 2 days later, you lose it. So you're like, wow, I'm a muppet. Like everybody's been there, right? So in order to avoid that, be aware that your dopamine levels do get jacked up when you pass a combine, reach a goal, you're ecstatic. That increase in dopamine leads to increased productivity and motivation. So you want to trade that fresh new XFA. Try to stick away from it for at least a week. It actually takes a full month for the dopamine levels to come back into alignment without any additional sort of things that you're doing like meditation or fasting or this or that, exercise. If you just want to, lead your life as you normally do, it's going to be a month before you come back to your normal self, before that feeling of elation and, call it euphoria, passes you entirely. Again, there are ways to expedite that, but it is tricky. So just take it slow. Go down to 1 micro, even if it's 150K combine. If you want to pop the I was going to say something there, but I'm going to try and keep it PG. So if you want to do the first trade in the combine, don't try to go the smallest size possible, right? So you don't want to do like full port, 15 Even 3 lots, I would say it's a lot, right? So if you do that, and if you size up, you do 2, 3, 4, 5 lots, and the first day ends up wonderfully well, just walk away for a week, right? Because that's also gonna put your dopamine levels out of whack. Because you're like, oh, I'm up 2K in the first day in the XFA. That's amazing. So I would just say size down completely. Do those first few trades where losing them won't matter. You're not gonna, and expect it. Expect that the first few days are not gonna go well. Expect it. That way you can prepare yourself better. Rather than being high on hopium and going, I'm going to be making so much cash now. And then 2 days later, all of those dreams kind of dissipate in a cloud of hopelessness. Because you sized up, dug a huge hole and reached that loss limit before you could say reset. So, I would say just size down, start with 1 micro, do those first few trades on micros, like 1 micro. Just get it out of the way, make all the bad mistakes, and then start getting back to normality. So that is something that's worked for a lot of my traders, just to not size up immediately. I mean, you can size up all you want in combines. You can do whatever you want there because there's always a reset. But at the XFA point, there's no more resets, right? So you need to try and give it your best to make it work. And you're not going to do it by not planning for the underperformance that is like a statistical inevitability, right? Whoever gets into the funded account, I've never seen anyone who has gotten the first funded account and did awesomely well in the first week. Everybody F's it up, right? Total car crash. So if we plan for that, if we go, okay, I'm going to suck on the first few days, let me try and size all the way down so that period of being really bad and making all the bad decisions due to dopamine levels and adrenaline and excitement doesn't dig a massive hole and doesn't derail your confidence. Yeah. All right, guys. That is it for today. I'm going to finish it up. Let's do some plugs. Obviously, do a like, please, if you found any sort of value in what I was talking about today. Please click a like button. It really helps us out a lot. What have we got? We've got some new programming that we've added recently. We've got 4:45 p.m. Central Market Kickoff with Nick for a tick. We obviously have Dakota at 7:30 p.m. with Slow Markets. And we added At the Buzzer with Coach Jay, Monday to Friday at 3:15 p.m. Central. That's after the markets close. And we have the London Open with myself at 3:30 a.m. Monday through Thursday. Now, we also have our Topstep Discord. So, Topstep Discord community where you can connect with the rest of our lovely members and coaches and a whole bunch of other extra stuff in there. So Bruno, if you can add that link into the chat, that would be lovely. So if you're not in Discord, what are you doing, right? If you need help, if you're struggling, that is where you're going to find most support, especially from the coaches. They all have their own designated rooms. Now, I am not quite clear whether this was yesterday or whether we're doing it today. So it says At the Buzzer guest coach Paul and Slow Market guest coach Jay. So let me just go and check whether Jay was already on Fast Markets last night. Because sometimes they say Wednesday is sort of Wednesday the previous night, and I never know whether they actually mean that was something that was happening yesterday. So yeah. Let's see. There we go. Yeah, so that was last night. So Coach Jay was the guest last night. All right, so that is it, guys. Thank you for all the lovely questions. I will see you tonight, my time, 7 p.m., which is 1 p.m. Central on Market Talking with Dee, where I'm going to be on, usually with Eddie and JD. So we're going to chat about a whole bunch of stuff, banter a little bit, as always, maybe talk about ice creams and... and some other useful stuff, because there's an ice cream truck that usually likes to roll right under my window around about that time. So yeah, let's do this all over again next week. I will see you again for Monday London Open at 3:30 a.m. Central and 9:30 a.m. London time. Thank you for being here with me. Take care.